And in our top business story, oil prices have reached their highest levels since mid-2015 after OPEC and other producers reached their first deal since 2001 to jointly reduce output in order to rein in oversupply and prop up markets. Brent crude, the international benchmark for oil prices, soared to $57.89 per barrel in overnight trading between Sunday and Monday, the highest level since July 2015. U.S. West Texas Intermediate crude also hit a July 2015 high of $54.51 a barrel. With the deal signed after almost a year of negotiations within the Organization of the Petroleum Exporting Countries and of non-OPEC Russia focus is switching to compliance of the agreement. According to industry analysts, the agreed deal amounts to an aggregate supply cut of 1.76 million barrels per day from 24 countries, which currently produce 52.6 million barrels per day, or 54% of world oil supply. OPEC plans to slash output by 1.2 million barrels per day from January 1, with top exporter Saudi Arabia cutting around 486,000 barrels per day in a bid to end overproduction that has affected the markets for 2 years. On Saturday, producers from outside OPEC agreed to reduce output by 558,000 barrels per day, short of the target of 600,000 barrels per day, but still the largest contribution by non-OPEC ever. Local banks are starting to warn their customers about new international tax compliance measures that will take effect in January as governments ramp up efforts to catch tax evaders. According to local reports, HSBC has sent a circular to its clients alerting them to the new measures that are being ordered by the Organization for Economic Cooperation and Development, a 35-member grouping of mostly European nations. The measures will make it more difficult for people to avoid paying taxes and will start taking effect next month. The move follows the United States' push in the past couple of years to collect money from its citizens abroad. Unlike most countries, the US requires that its citizens pay tax above a certain salary threshold, even if they live abroad. Banks across the Middle East have been helping the U.S. governments with the implementation of the U.S. Foreign Account Tax Compliance Act, or FATCA, for individuals subject to these tax laws. Recently, the UAE has emerged as a hub for private banks catering to wealthy clients, many of whom are able to store assets in offshore accounts around the world, such as Jersey, Switzerland and Hong Kong, as well as in the UAE. Private wealth in the UAE has grown at the fastest pace among Arabian Gulf states in recent years, according to a study last year by the consultant Strategy An. While wealth in the region grew at an average of 17.5% a year from 2010 to 14, doubling to $2.2 trillion from $1.1 trillion, the UAE's wealth increased at an annual growth rate of 25%. The new levels of disclosure are making total anonymity increasingly difficult, with UAE-based financial advisors stating that the vast majority of citizens and subjects of OECD nations have little to worry about, as expats from most of these countries have few, if any, tax obligations while working abroad. With all routes gearing up to Expo 2020, Hyperloop, the ultra-fast transport system, will serve as one of the modes of transport to the Expo sites. The Roads and Transport Authority signed an agreement last month with Hyperloop One, the US-based firm that is currently conducting a feasibility study on the construction and operation of the futuristic transit network. Hyperloop is the ultra-fast transportation system that will run passenger and cargo pods at speeds of around 1,100 kilometers per hour and is capable of running a pod every 10 seconds. When completed, it is expected to carry 15,000 passengers per hour per direction, almost double the average hourly footfall estimated at the Expo 2020. According to local reports, Colin Reyes, the creative director of Hyperloop One, who was quoted in local reports as saying that the company would like to see people riding on a Hyperloop to Expo 2020, adding that it is ready to deliver well before the date. The exact route that the Hyperloop will take to the site is still to be finalized. And car dealers in the UAE can expect slower sales during next year because of the economic slowdown, job cuts and a glut of unsold vehicles. According to Auto Data Middle East, a Dubai-based data provider for the automobile industry, new car sales in the UAE are down by nearly 30% on last year and will not recover until the end of next year. The introduction of value-added tax in 2018 is another dampener on sales, as well as the liquidity crunch, according to another report by Dubai-based investment bank Alpen Capital. The report stated that the recent liberalization of fuel prices, exchange rate fluctuations and car imports through non-regional distributors or the grey market will affect car sales, although a recovery in the automobile market is predicted in 2018 as more infrastructure projects get underway and the population increases. The number of passenger cars in use in the UAE is expected to expand at 5.3% a year to reach 2.5 million in 2020, compared with 2 million last year. New car sales in the UAE are also forecast to grow at a rate of 4.5% a year to reach more than 267,000 in 2020.